Utilizing this simple and effective level can help you improve your trading. In today's video, we cover how to use the daily open to your advantage. Enjoy. Alright guys, to get things started, first I'm going to define what is the daily open. And the daily open is simply the opening price for the day. Now you can use this on futures. In this example I'm using /NQ. So in my case right here, it's going to be this yellow line. You can see this dashed line right here. Actually, let me move this up here. You can see this dashed line right here. So it's the start of the session. This yellow line right here is the daily open. So it's the opening price at which the stock or the market trades at. And you can use this again, like I said, on the stocks or on the market. Now, why this daily open is so prevalent in such a key level is because it determines whether we are green or red on the daily chart. So you could start that right here, and if we're below that daily open or that yellow line that I showed you, then this would be a red daily candle or a bearish daily candle. In essence, what you could use this or utilize the daily open as is you could do calls above, so up here, and then puts below. It's a simple, basic way to do it. Why? Because then we know either we are red on the daily or we are going to be green on the daily. Before I get into exactly more examples from today, you may be wondering how you can get the daily open. You could either go in and plot this level yourself on the daily opening price, or what I do to have on Thinkorswim to automatically do this is if you go to edit studies, you go right here and you just type in daily open, you can just add this and it will plot this for you. So again, how this acts is resistance below, so boom, 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 and then support when you're above. So we come back down to resistance, and I'll show you a really good example right here. We had some data here today on /NQ, and look what happens. Where do we pull back into? Coincidentally, to the cent of the opening print, and then we get a rally here. So just by having this level on your charts is extremely helpful for you guys to find support and resistance levels and really, really good solid levels to trade off of. Now we can go into an example here on SPY today as well. Let's go into SPY here. Notice how we're acting as resistance below, right? And support above. So we can see this clear as day right here. So we got this rejection. We have this one. We have this one. What happens when we're back above? Support. What happens when we're back below? Resistance. Multiple scenarios for you to take this setup here today simply from watching this level right here. Now it coincides with pre-market levels as well, but you can see, so we're acting as resistance below, and then once we pop over, it becomes support for the upside move. Potential up into this green level right here is the prior day high. But you guys can see just how prevalent this level is. A lot of people don't have this level mapped out, and then you would be wondering why reject here, 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 why held right here or rejected right here. So just by having the daily opening price gives you a good level to trade off of. I wanted to cover a few more examples from today as well. Let's go into AMD. Coincidentally, how does this one look? So we get the similar, very, very similar structure. So we have a support above. What happens here? Rejection. What happens here? We bounced off of this move right here. Where do we end up rejecting and failing? Right here at that opening print. So if you wanted to take this rejection, you could have taken this rejection here with a stop on a 5-minute close above here. And whatever your target is, either you're going to be using an R-based target, a level, or an area of significance. Either way, all of those work. But a prime example here, we just failed down, and then we come back up, and then boom, we reject right at that daily open, which is the opening price for the day. Now again, like I mentioned, you can put this on multiple ways. I'd recommend using the daily open because it automatically plots for you. Instead of you having to manually plot this every single time, just by looking up the daily open can allow you to just have it automatically plotted to your advantage. Now I want to look at another one. Let's take a look at SMCI. It's been a very, very strong name as of late. Look at how this one's acting as well. So we're acting as resistance, and let me get this annotation tool out. So we're acting as resistance, resistance. What happens here? Support, support, and now we're testing this here as support. So if you wanted to take this long on this higher low entry here, taking it at the close and break of this candle high with your stop loss below here in a failure to hold this daily open price. And you'll notice, like I mentioned before, if we're holding the daily open, what does that mean? That means we are going to be green on the daily chart, which shows us some significance and some strength. Now, one last thing that I want to note too is you could use the weekly open. So if we want to map out the weekly open instead of the daily open, it would be right here. And let's just go into like Apple, for example. So, or actually, let's go into SPY. So let's go into the SPY weekly chart open here. So we got that weekly open right where this bar opens at 484. Now let's zoom in to intraday time frame. Look how this level has been acting of an area of significance. So even if we go from Monday and Tuesday, look how when we get back below the weekly open, reject, reject, reject. So now if we come back into that weekly open at 484, expecting some area of support to hold here. So not only can you use this on the daily open, but also pay attention to this on the weekly open. If you have any questions or comments, feel free to leave them down below, and I hope this video helps you guys understand the daily opening price. Thank you.